This is at 5 minutes. Huh. It's no bueno. Here it goes. Whoa. Well, that dicked the chart, didn't it? Damn. I go to the bathroom. Old Taco Bell.
One eternity later.
Kill a big ass spider.
Palantid analysis?
What ticker? Palantid? I don't know what you're talking about. I'm happy to look up a signal. Oh, Palantir. PLTR. Daily looks great. Fresh breakout all time. Yeah, all time highs. Oh, not all time. 52 week highs. Looks great. I wouldn't be surprised if you get a pullback and go, but it could continue. But either way, I think you've got 30 on the brain. I don't know if it gets to 30, but it definitely looks good. It's a big, I mean, in something like this, I wouldn't be surprised if you got a little pullback and go, but it looks good, even if it just wants to go. SNGX. Wow. Positive outcomes. Stage. Oh, for crying out loud. Morning to you too. Being from Zap? No, I don't say that. Damn. Can I trade this? Yeah. 5-minute cuck happening on Zap right now. Oh, this is gonna go again. Damn. Goes. Test the highs again. Wow. Jeez. Tesla's been on roids. Yeah, that thing's crazy. Holy shit. $418 break. Oh, there it goes. No. It's holding 4. Watch the move again. Damn. Oh, I know, man. It's disgusting how this number can't get over it. Still buyers showing up on this pullback. Zap 5-minute. I don't really like that chart, but it's there. I think it fired. Yep. All right, give us the W. 92 break. Go. gonna do it. 4. Jeez. CBS, let's go, bud. It's another down test here. Freaking come on, there's no way. Are you freaking serious? Right into a cock. Son of a bitch. Wow, that couldn't go, huh? Dude, every time I get in this, it goes to 4. All right, it should go now. That cracked 4 and didn't do anything. Holy hell! All 3 times I've taken this trade, it's gone red on me immediately. cooler. I am the cooler. It's really something. Let's get weird. Yikes. 6 million in profit for the quarter. $0.5 billion company. I was not going to get money on that one. $25. Is that right, Jake? Is that how it works?
Not confused.
It's a cuck. There it goes. Big sellers up there at 4. You got the 5 minute with a bit of a diagonal here as well, but I don't like that. MACD. Eight o'clock. Let's see if we get any news. This might take a second. There it goes. JNVR had a Benzinga exclusive. What the I don't like seeing that on accident. Jeez. Freaking 8 o'clock orders scare the shit out of you. Watch that 1435 on Zap. It's gonna go or not. Is here? No. Nope. Alrighty. Holy shit. Oops, sorry. Beam. Interesting if it gets over 850. Then you start making higher highs rather than, I don't know what caused this volume and move up, but we need to stop making lower lows, start making higher highs. Looks rough on the daily. pussy. Gee, are moving again. Jeez, JNVR. Meds dividend, cash dividend. The hell? How much a share? $1.30, $1.50. Spreads suck on it, but that's still flipped down. What is that wick? 15. TSM, yeah, I think it's been juiced. I don't know, man. Is that where he's at in front of Congress? SNGX going again. This is 12, 25. Can these spreads not suck? SNGX back up there. Jesus. SNGX $5. Jeez. Oh, come on. Freaking. There's the break. $35, $40. Can we take it out again? The hell is that shit? This got thick real quick, didn't it? There it is. If I take it, it doesn't go. If I don't take it, it goes. Like, damn. Damn. Darks and snapping, going at it at freaking 8 o'clock in the morning. Why don't you guys just mute each other? Zap went. All these whole dollar breaks have been pretty good. Hell. Jeez. What are these spreads? Zap, dumpy, dumpy. Shifty, let's go, bud. 9 months. Mom says
Mom says I'm
it's good.
handsome.
It's good. This thing got thick. Said GX high day again. Jeez. Got a 5-minute cock there. There's not much that I'm too in love with. SNGX moved well. Zap, obviously, but that's pulled back pretty hard. So the boys have got their watch lists up. All right, 8:30 news, and then I'm gonna go drop my van off. I'll leave stream on. I'll be back. Yeah, I gotta take it in to get serviced. No way, this is back up. What? That's crazy. Oh my gosh, Sue run. This thing does not break out well. Um, 20 seconds till 8:30 news. One thing I forgot about is the Republican convention is Monday, so DJT is going to be probably in play going into that. So this JNVR news is now hitting the other channels. So. $0.25 a share. It's interesting that they're going to convert at 25 cents a share. This probably moves up. But I don't know. Merger RSLS. Moving on that one. All right. I'm going to go take the van in. I'll be back. I'll leave it up.
SNGX, Aliginix shares continuing to move higher, $5.67. $6 now, up 200% at the highs. Sandy November Golf X-ray. Coming up at 8:55, Red Book. HIMS, Truist making traders circulating a positive note from Truist. That's Hotel India Michael Sandy. Redbook U.S. retail sales first 5 weeks of June plus 5.7% versus June a year ago, plus 6.3% for the week ending June 6th versus July 6th versus a year ago. That's Redbook. QURE, Unicure getting another spike here to the highs, $5.27. Quebec Uniform Romeo Echo Company announced data for its Huntington's disease study that is QURE. QURE getting another pop here. Quebec Uniform Romeo Echo, $5.40. HIMS share is down a penny right now. Truist out with some comments, positive comments regarding their GLP-1 launch. That's Hotel India Michael Sandy. QRE, Unicure, getting another pop here, up more than $2 now. LUMN, Brightspeed, awarded $213 million. Disregard LUMN. The information reporting Andreessen Horowitz is building a stash of more than 20,000 GPUs to win AI deals. ZVRA, Zevra, announcing FDA advisory committee meeting to review arimoclomol to treat Niemann-Pick disease type C. That's Zulu Victor Romeo Alpha. SDOT, Sadot Group announcing new trading arm, Sadot Canada. That's Sandy Delta Oscar Tango. MYGN announced second foundational patent granted for molecular residual disease with early priority date. That's Mike Yankee Golf, November. WYY, WidePoint awarded $2.84 million in new and renewal contracts. That is Whiskey Yankee Yankee, WYY. MASI, Masimo's sees Q2 revenue of 496 million versus the 493.6 million estimate. That's preliminary results for Q2 from Michael Alpha Sandy, India. IGC Pharma, IGC announcing preclinical data demonstrating TGR-63's potential as effective treatment for Alzheimer's disease. That's India Gulf Charlie. Shares at 47 cents, up 6 cents. TNXP, Tonix Pharmaceuticals, announcing pricing of its $4 million public offering. Tanga November X-ray pop-up, 57 cents, 7 million shares. That's Tanga November X-ray pop-up. ASUR Assure announcing strategic partnership with MYHR Screens to provide enhanced background screening services for small and mid-sized businesses. That's Alpha Sandy Uniform Romeo. ASUR GPRO GoPro partners with SoftBank in Japan to sell GoPro products through one of the largest sales networks in the region. That's Golf Papa Romeo Oscar. FNGR Finger Motion debuts advanced solutions for nationwide emergency response management. That's Foxtrot November Golf Romeo. FNGR. QURE, Unicure, more highs now, $6.08. Quebec Uniform Romeo Echo, QURE.
Tua.
One minute to the U.S. market open.
Noon existing members, disclaimers posted in the High Beta Squawk chat room.
NASDAQ up 65.8. S&P 500 up 10.71. Dow Jones up 47. Dow Jones is down 47.
Let's take a CVS, Charlie Victor Sandy shares seeing
After
heavy
the open.
activity at the open, new lows. A note out from the FTC. Comments from the FTC. Middlemen have outsized influence on U.S. drug prices due to market consolidation. Ticker Cigna, CVS, and Humana all impacted by news. Ticker Nvidia, this week's 135 calls active, shares see new highs.
SDST halted on a circuit
Ticker
breaker.
Nvidia, calls still
Sandy
active
Delta
for
Sandy
Nvidia, new
Tango.
highs.
Light volume on that one. Shares of Jumia spiking here, $9.56. Earlier note out on Jumia. ANVS Anavis halted on a circuit breaker on the way down. Alpha November Victor Sandy. Jumia shares continue to spike here, up about 16%. Juliet Michael India Alpha. PLTR getting a pop here, 28.15. Papa Lima Tango Romeo. Company earlier announced a collaboration with Oracle. PLTR. LGVN, Longeveron shares up 21%. Lima Golf Victor November popping here. Jumia now over $10, up 18%. ANVS Anavis resumes trading. Alpha November Victor Sandy. SWVL secures contract 5 years up to $6.3 million with telecom giant E and Egypt. That's Sandy Whiskey Victor Lima. KOSS costs. Getting a pop here. Kilo Oscar Sandy Sandy.
That ticker Tesla, TSLA. Note this week's 270 calls active. Share see new highs for Tesla.
It's a good day to hold NVDA, just like most days.
That ticker ENVX, Echo November Victor X-ray. Share seeing continued heavy activity, new highs. EVX.
KOSS costs, granted U.S. patent, personal acoustic systems, and flexible earpiece mounts for the same. Kilo Oscar Sandy Sandy. Fed Chair Powell giving his semi-annual address to Congress. That's coming up at 10 a.m. Eastern Time.
Let's hear KOSS, Kilo Oscar Sandy Sandy. Shares seeing a spike in activity, new highs. Note patent circulations on the name KOSS. No ticker SNGX, Sandy November Golf X-ray shares spike with activity for SNGX. No shares currently attempting an upside halt.
SNGX halted at the highs now on a circuit breaker, $7.55, up 277%. Sandy November Golf X-ray. KYMR, Chimera Therapeutics, hitting the highs now, up 24%. Kilo Yankee Michael Romeo. Chimera shares moving as Sanofi intends to expand its Hydrodentis Dentatus Supertiva and atopic dermatitis phase 2 trials. That's Kilo Yankee Michael Romeo. SNGX, Soligenix shares resumed trading. Continuing $8.47 at the high now. Shares up about 300% at the highs. That's SNGX. NVIDIA pumping to the highs, up about 3.5%, 132.79 the high on NVIDIA. Jumia, new highs now, $10.56. Juliet Michael India Alpha. Fed's Powell says labor market is strong but not overheated, says inflation is not the only risk we face. More good data would boost confidence on inflation. Powell says
Ticker WSC,
elevated
Whiskey
inflation is
Sandy
not the
Charlie.
only
Note a
risk
short
we
report
face.
out on WSC.
Restrictive policy is helping put downward pressure on inflation, reducing
That
restraint
is from
uh,
Dalrymple Finance.
later too
We're
little
seeing
could
increased
unduly
activity, new
weaken the
lows for
economy and the
WSC.
job market. Powell said we'll carefully assess incoming data, balance of risks, and appropriate policy path in rate adjustments. Remain committed to 2% inflation goal, keeping longer-term inflation expectations well anchored. Fed's operational independence needed to take longer-term
We'll ticker
perspective
FITB,
in pursuit
Foxtrot,
of
India,
goals.
Tango, Bravo.
That's from
Chat
Fed
room
Chair
circulation attempts, FITB.
Powell. FITB, Fifth Third Bank, CFPB takes action against Fifth Third for wrongfully triggering auto repossessions and opening fake bank accounts. That article being circulated now. Foxtrot, India, Tango, Bravo, FITB. S&P futures getting up quick pop to the highs, 56.42.75, up 15 now. SLR, Polaris Pharma shares getting a pop here. on light volume, SLRX. FITB, Fifth Third Bank on that article. Initially, 35.67 the low, now getting a bounce here. That's Foxtrot India Tango Bravo. JMIA Jumia shares hitting $10.77 at the high of 27%. WSC shares volatile here. Traders circulating a report from Zeros TV, Willis Scott Mobile Mini, a crumbling and neglected fleet. That's Whiskey Sandy Charlie. ZAPP, ZAP, resumes trading now. Zulu Alpha Papa Papa. Shares off the highs now, up 30%. $11.78, ZAPP. KOSS costs at the intraday high now, up about 21.5%. Kilo Oscar Sandy Sandy.
No ticker Bitcoin share seeing heavy activity, new highs for Bitcoin.
Bitcoin futures are moving higher here on some volume, up 2.5% for the session at 58,235. CRML, Critical Metals, signs a joint venture agreement with Obaiken Group for lithium hydroxide. Charlie Romeo Mike Lima, CRML.
Ticker IVP share seeing continued heavy activity, new highs. India Victor Papa.
seen reports of a new trade agreement between India and Russia, a $100 billion trade target aimed to, quote, broad base the trade basket. Modi and Putin agreed to expedite supply of defense spare parts, including through joint ventures in India. Ticker F Ford, the Blue Oval Battery Park, Michigan, on track for production in 2026. Crude futures moving a little higher here. The Nigerian state oil company is in talks to secure another oil backed loan. It's an exclusive from Reuters. Sources say the NNPC seeks a $2 billion oil backed loan to fund its fuel imports. Crude futures popping a little bit on that news. Treasury Secretary Yellen says that restrictions on investment into China for artificial intelligence are narrowly targeted at clear national security risks. That's her speaking at the House Financial Services hearing. Fed Chair Powell says that we are in the process of studying implications of Supreme Court decision on regulation. Fed Chair Powell says that they're working through the question and with the FDIC and OCC have not reached an agreement yet. Chairman Powell says that when we reach an agreement with other agencies, idea is we would publish proposed changes and effects they would likely have. After another round of comment, we would then finalize the proposal. Public comment period might be 60 days. Says a lot of work is needed before put out a revised proposal. This in relation to Supreme Court rulings on regulatory agencies. Fed Chair Powell says we have significant housing issues in the country. Says the pandemic created new distortions in housing. Says our tighter policy is having an effect on activity in the housing sector.
Ticker NNOX, November Oscar X-ray. Sure see any spike in activity, new highs. No circulation, any new long idea from Zacks, NNOX.
Treasury Secretary Yellen making some more comments.
Hey,
Says she's
hello,
pleased with the passage
nah.
of the Repo Act, authorizing U.S. seizure of frozen Russian assets to aid Ukraine, but looking to create a coalition to provide assistance. Also says believes big inflationary impulse seen in 2022 was global in nature and stemmed from
What'd I
supply
miss?
problems after the pandemic.
$10?
Secretary Yellen says many of those supply problems have been resolved and wage pressure is easing.
Jeez. This is nuts.
Treasury Secretary Yellen says inflation will continue to come down over time and rents are keeping it higher than we would like.
Holy hell. Damn. Where my level 2 go? It's fun.
S&P futures ticking downward here.
Shut your mouth, Looney. Ban yourself. To restart, E-turd. See if I can level 2 now. See if we get lucky. Or maybe it just doesn't want to load up. Oh, there we go. What was behind that? Okay. Oh, it's gonna 5-second roll stream, boys. Hot damn, that soak. Oof. Holy dung. Oh, I've already tapped it like 3 times today. Fresh. It's very active today. We're ready right now by like $70. It's 43. Amazon 200.
I haven't seen you in a bit, Kathy Woods.
Oh my
How are you?
gosh. Verify and freaking smack yourself in the nuts for me, okay? Thanks. 6 months.
GM, Golf Mike, company and joint ventures delivered
That's your
nearly
ATNF Alpha Tango
373,000
November
vehicles in
Foxtrot.
China
Shares seeing
in
continued
Q2
heavy
2024.
activity for new
Golf
highs.
Mike.
ATNF.
There it goes.
Fed Chair Powell says that the banking sector is on strong financial footing in regards to the latest stress test results.
Anyone have a link to FedPal? I'll turn it on. It's probably something we should have up. I don't have CNBC. C2 halt. Oh, it's on YouTube.
Because I'm not sure it's noted that I raised them as well. First of all, I want to agree with the chairman. You know, I probably hear more on housing and housing affordability than any other issue, and I agree with the chairman. I know we've discussed this around a rate cut, and I understand most of your answer, but I still want to add my 2 cents here. We've got to find a way to start bringing mortgage rates down and let people get unlock that housing market. And again, we've discussed the rate cut issue, and I know you've got to navigate that, but I hope it's sooner than later. I will not recap what I've done in the last couple hearings with you, but I do think the discount window proposal that I've gotten, that I know you're working on, you know, before we think about additional regulations, and we do need in some cases, I think the discount window is an underused
Back to
tool.
green.
It was one of the original tools for the Fed. A lot of my colleagues have talked about quantitative easing, or Basel III endgame. I do hope when we get the revisions that we'll see the quantitative analysis that, again, Senator Tillis already raised and other colleagues have raised. I also hope that one of the questions I raised in my March letter to you was, you know, making sure any new regulatory structure, how it intersects with existing regulatory structure in terms of market risk, credit risk. And I, again, hope that we will have that as the revisions come out. I think one of the things that this debate around Basel III raised was that it is, my understanding at least, looked at, you may be all looking at revisions to liquidity standards as well. And
He's trolling over there too,
wanted to
Blaine.
see what you could say about that and whether that part of those standards are under review and what your thinking is.
Someone
And I
give
think that actually
Stocky
connects
a
to
heads
the
up.
Silicon Valley Bank questions as well, where I think there seems to be a need to update assumptions about liquidity. And that's a separate proposal that we're also
I don't know if
working
he
on.
got banned.
And, you know,
Decatur
very important,
banned
I
him.
think we saw how fast that run was. It was just exponentially faster than prior runs. That's the new world, and you know, that's some estimate of what that world is baked into things like the liquidity coverage ratio, for example. and
Right,
other-
and
Or
wasn't
did she
that the
just
case
time
that,
him
you know,
out
you
for
had
like a
25
week?
cents on every depository dollar leave in 6 hours, no matter what the capital standards are.
Yes.
And one of the things, I guess, you know,
Wondering if
there was a
snapping
lot of
got
talk
banned or not,
after
or timed
SVB
out.
that we need to think about
Snapping when you're
internet-driven
on.
runs. A lot of us raised concerns. Candidly, I'm not sure I've heard any good proposals. So whether it comes from you guys or from folks listening, how we think about this new internet-driven world, and frankly, I think some of
Cater
the
right.
irresponsible behavior by some of the folks that were major depositors in SVB, who in many ways shouted fire in the crowded theater, and we've not seen any action there. So I would welcome additional ideas as well. And that kind of brings me to my last questions around
Cater, you know, you
around,
can always, if you don't feel
supervisory
like, if you
reform.
feel
I
like
know the
being,
GAO,
you know, banning is too mean,
criticized
you
the
can
Fed's
always time out for
supervisory,
like
procedures
3 days,
in the role
for a
they played in the
week, a month, I
2023
don't know.
failures. It is a whole brand new world. Are we going to look at, will your changes to supervisory standards be comprehensive? Will they be one-off? How do you think about that in light of the GAO report and also in light of just the SVB and the few of the other
If all they're
failures you
doing is
saw
coming
last
here
year?
and starting
Vice Chair
shit,
Barr is, who's Vice Chair
feel
for
free to
Supervision,
be
is
liberal. And it's not an
leading
OG
a
or
process
someone
of
that's subbed for a
looking
long
at
time.
at the way we supervise banks
Feel
and
free
thinking
to
about
be
how we
liberal with
can
the
be
timeout button.
faster where it's appropriate, more forceful where it's appropriate. And I think, you know, they've taken
So
a
this
pretty
1
deep
minute here.
dive and tried to learn these lessons and then implement them in a way that is appropriate. So that's a big project.
What is he
going
wearing
on at
now?
the Fed right now,
Rolex?
which really Vice Chair for Supervision leads.
I think I remember lots of conversations with the chairman, with you, with the FDIC, and that Thursday through Sunday. And I think the solution you guys came up with, the administration came up with by Sunday night was a good one, but they were a pretty scary 3 or 4 days there. And it did seem like the process, I don't know completely how you get fully ahead of that,
Sit Mariner.
but
But I was kind of
I
thinking,
firmly believe that there should have been a clearer early warning system. and trying to make sure that that we wouldn't be in that kind of crisis situation going forward. And again, I would strongly encourage any additional thoughts on this technology risk and how we get that right.
Fed Chair
Thank you,
Powell
Mr.
says
Chairman.
that Vice Chair Barr is leading the process of looking at Fed supervisory standards as we are looking at where we could be faster and more forceful where appropriate in supervising banks.
Mr. Chairman, our
Bravo Alpha, BA Boeing,
economy is
reporting
slow.
June deliveries of 44 commercial jets, including
Yes, although
34
still growing at a
737
solid
Maxes
pace.
for the highest monthly total
Our
in 2024.
unemployment rate
Bravo
is
Alpha,
rising.
I'll
BA.
take an
Yes,
Airbnb,
it is,
Alpha
although
Bravo,
the labor market
November
is still strong.
Bravo. Notes circulations of an article from CNN. CNN investigation found that
market is slowing, is it
Airbnb
not?
consistently fails to
Yes,
protect
but
its
I'd say
guests,
unemployment is still, is
despite
still
knowing
low by
hitting
historical
cameras
standards,
are a
but yes,
persistent
it
concern
is
within the
good. We've
industry.
seen
Hitting
cooling,
cameras
yes.
placed in bedroom and bathrooms so
And
guests are in their
I
private
was looking at
moments.
the
They're
recent
now being
jobs
circulated
numbers.
on Airbnb.
I know you've glanced at them too.
It's a negative report. Yeah, it's going up.
About 3/4 of the net new jobs that were created in June were in government, healthcare, and social assistance. What does that tell you?
So that's a concentration. You'd rather see broader job creation than that. Those three areas have, in some reports, they've been, as it was this time, they've been the predominant creators of jobs. That tells
TSLA,
you that
Tesla
job creation
shares
is becoming
seeing
less broad. and
session
the
highs
economy is
here.
narrow- it's narrowing.
It tells you that government's
259.
creating those jobs, doesn't it?
Well, it's
58,
government, it's
84,
it's
up
it's
2.3%.
also in-person services, it's
I think it was
also,
Sandy Lima Alpha.
it's
Well,
some of it's government.
Manufacturing's been flat.
Yes, manufacturing's not creating a lot of new jobs these days.
Information technology shed jobs over the past 2 years, hasn't it?
I don't know.
Leisure and hospitality jobs have slowed to almost a trickle.
So that's a place where there was a desperate worker shortage, and they've done quite a bit of hiring, but they're catching up now.
I mean, three-quarters of the jobs that are being created in our economy can be related directly or indirectly to our spending deficits, can't they?
In this report, in this single report, I don't know that healthcare is really government spending. I mean, that's something people are
Where do you
consuming.
think these hospitals get their money?
They may get it, but I mean, people are not. The spending on healthcare is not necessarily directly related to deficits. Is my point.
I would disagree with you. I mean, here's my point. We talk a lot about expectations in terms of inflation. How if we expect there to be inflation,
Shit. That's right.
we'll get inflation. It seems to me that
Is he in
consumer
Louisiana?
expectations play a role.
Fed Chair Powell says
a bigger role in
unemployment
the
is still
economy
low by historical standards
than-
and says
than
job
we
creation
see.
is
I'll take a
narrowing in
JPM,
the
Julia
economy.
Papa, Michael, share
Most
seeing
of
a
our
spike in
economy
activity,
is-
new
in
highs for
America is
JP Morgan.
consumer-driven, is it not?
Yes,
Unlike, say,
I
China,
love
which
when
is
we talk
manufacturing.
deficit spending
very much so.
as they sit in their
And I listened to
rooms
you
with their
cite
marble
the
walls.
statistics about the economy. But
just
most
so
Americans,
funny.
most Americans don't feel good about the economy, do they?
No, and we don't tell people how to feel about the economy.
I mean, isn't it a fact that most people, if you ask them to define Bidenomics, they would say that's easy. We get to pay more to live worse.
I wouldn't touch
You don't want to answer that
a
one.
sentence with that word in it.
Yeah.
What word did he say?
I mean, we can pretty this up all we. I guess my point is, and I know you're going to do this anyway, but I'd be really careful with this economy.
Oh, he said
I mean,
Biden.
people just don't
Bidenomics.
feel better off today. And one can marshal a persuasive argument that, well, you should, compared to Europe or compared to China, compared to Canada. But feelings are feelings. People don't feel good about this economy. And it's primarily because of inflation. Let me use my final 30 seconds to ask you. I listened to my good friend, the chairman, give his opening statement. Do you think inflation was caused by corporate greed?
I hate to comment on something the chairman was speaking about.
I'll
but-
go ahead.
Well, so I will just say, we see at the Fed. we
Ticker
see inflation
BILI,
as-
Bravo
as,
India Lima, India.
when
Shares
there's
seeing a spike in
an
activity.
imbalance
New
between
highs, no
supply and
China
demand.
related issues.
And we
Seeing
use our
increased
tools
activity.
to work on the demand side of that and bring it back into line with supply.
I got 2 seconds. So when are you going to lower interest rates?
I'm today not going to be sending any signals about the timing of any future actions.
Thank you, Mr. Chairman.
Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. Welcome, Chair Powell. It's good to see you again. I want to follow up on kind of the line of questioning that Senator Tester was on a bit ago. He was talking about how the U.S. economy has been outperforming other advanced economies around the world in terms of growth rates, in terms of unemployment, in terms of inflation, getting inflation under control, though I think we obviously can all agree that we're not.
He's
at
got to
least
think
from my
it's just like a
perspective, we're
giant
not-
waste of time.
We're not done yet, and we don't want to rest on our laurels. But I'm wondering if you could share what you think that we have
is a
learned
giant
from this
waste of time.
experience. What have we done right, and why is it that we are doing better than some of the other advanced economies in the world?
I think that it's down to the fundamental strengths of our economy. So, as you may know, European economic officials are very, very focused on this question. They really, it comes up in all of our discussions. Europe has seen productivity increases of about 1% a year for 40 years. We've seen 2%. If you take a number and compound it at 1%, then compound it at 2%, the difference is just enormous after 40 years in terms of incomes and living standards. And their question is, why is that? Why is that? And the standard answer that Americans tend to give and that I would give is it's down to, more flexible labor markets. They in the pandemic, people they stayed in their existing jobs.
Fed's
In the United
Powell
States,
says,
we had people changing jobs
I'm
at
not
record levels, and that's the kind of thing
sending
that adds to
any signals
productivity
today
and
about the timing of future
contributes to
Fed
rising
policy
living standards,
actions.
going back to school, getting skills, and things like that. Another one is our financial sector. We don't just have banks. We have a highly developed ecosystem of financing sources that will fund early stage investments. Banks are really not set up to do that. They're prudentially regulated, and so those are some of the things. I think we just have these natural strengths as an innovative, more flexible economy. We can grow faster.
I appreciate that. I think sometimes there's a tendency to sort of trash our economy and to sort of say, oh, we suck. And actually, I think that there's great resilience in our economy. I would argue that it has also to do a lot with the incredible resilience of our workers and their creativity and their talent and the training and the education that they have. And I think I would also argue, though I wouldn't expect you to make this case, that the way in which our federal government responded to the pandemic in order to make sure that people weren't evicted, that they still had money to pay their bills even when they weren't able to work, meant that overall our economy, survived and was ready to kind of be off to the races when we emerged from the pandemic. But Chair Powell, I'd like to ask you a question, something that you and I have talked about, I continue to be thinking a lot about, which is the commercial real estate risk that we have in this country. I think particularly for office space. We know that has been under strain the last several years. The sector has remained largely stable, but we are hearing about some additional default risk. And one thing that I'm noting is that there's some expectation or concern that may fall disproportionately on smaller banks. I think that commercial and regional banks hold an estimated 2/3 of all the commercial real estate loans in the country. And so unlike larger banks, these smaller institutions might find it a little harder to deal with this. So could you discuss this with us? Could you tell us a little bit about how you see this risk and particularly whether this poses some additional risk that we might be seeing more concentration in the banking sector as these smaller banks are maybe under more pressure?
Yes, so this, to your point, this is a risk that has been with us and will be with us for some time, probably for years. And banks need to be, honestly assessing what their risk is. They need to be assured that they have the capital and the liquidity and the systems in place to manage this risk. The stress test that we apply to the largest institutions stressed commercial real estate pretty hard. And again, the conclusion is that the large banks can manage this problem. And most small banks can too, but it is in some smaller banks that tend to have that local concentration in commercial real estate. And, we're in touch with those banks. The supervisors and regulators are in touch with those banks and making sure that they can manage them. And it's going to be an issue for many banks, but it's one that we're trying to work through, one that we're very much aware of. And again, it'll be with us for some time.
Thank you. I think so much about the importance of these small regional community banks in small towns, even big towns in Minnesota, and how important it is that, in my book, that they can stay independent and better serve their communities in that way. So I worry about this risk. Thank you, Mr. Chair.
Thanks, Senator Smith. Senator Butler of California is recognized.
Thank you, Mr. Chairman. Chairman, good to see you.
Good to see you.
And I am going to make you do the whole last 5 minutes, since I'm the last one for today. You'll recall the first time that we spoke, I tried to engage you around 3 specific areas. One was how the monetary policy impacts the quality of life for young Americans in the future, and the work that you are doing there, the space of climate risk, and what I
Chair
see
Powell,
as potentially
when asked about commercial real estate loan risk, says risk will be with the banks for years, says banks need to be honestly assessing their risk to manage it.
No surprises today.
Because large banks can manage this problem.
Topics.
For smaller banks, we are in touch with those banks to make sure they can manage them.
Before, relative to the housing market, housing affordability, and interest rates, I want to narrow the scope just a little bit to ask about those issues and challenges impact, again, the quality of life for America's next generation. Given the severe shortage of affordable and available homes to buy, coupled with high interest rates, young Americans are continually unable to afford homes and are pushed into a rental market, driving rental costs up. So there is sort of trickle-down impact here. A recent Washington Post analysis showed that Gen Z is spending 31% more on housing than their millennial counterparts were 10 years ago after adjusting for inflation. How do you view, that was a long lead-in to just ask the question, how do you envision or view the interest rates of today and the monetary policy balancing that the Fed is doing on contributing to the future generation predicament if we are to extrapolate the conditions of today?
So our job, of course, is the whole economy and inflation for the whole economy. And the absolute best thing we can do for younger people is to restore price stability so that as we benefited from, I graduated from college in 1975, near the end of the big inflation period. So during most of my adult life, inflation has just been not a factor. And that means, stable interest rates, relatively low interest rates. We want to get back to that. And that is what the Fed's job is that we're not supposed to look at the housing market as separate from the overall economy. In the meantime, though, there's no question that higher interest rates are making it harder to buy homes in the short term. But in the longer term, this is the best thing particularly for younger people who are not yet in the housing market.
Let me sort of in line with that community, constituency, population, and definitely aligned with the concerns of my state that's actually facing some severe climate impacts, just as we speak with wildfires and our colleagues and fellow Americans in Texas and the impact of the hurricane. I wanted to pull in your sort of thoughts about the Fed pilot on the climate scenario exercise. In May, the Fed conducted a pilot climate scenario exercise and asked the 6 largest U.S. banks to examine their balance sheets and how it would be effective if a large hurricane hit the Northeast. They reported facing data gaps on property characteristics, their counterparties and insurance coverage. How does the Federal Reserve intend to invest in expanding the modeling resources for banks that are implementing climate-related financial disclosures?
So we haven't made any decisions on what to do with that information or whether to repeat that exercise. To your point, it was really a learning exercise. How are banks thinking about this? And how are they modeling it, and how does it work really? It's a very, very challenging thing to model. And so that was really the nature of this exercise. In terms of disclosures, we don't really have that's not really our job. That's really the SEC. So
Crude
but,
futures
we're-
dipping a little bit lower over the
we don't
last
have a
few
big job
minutes
on
at
climate, but what it
the
really is to
$82
make sure
level,
that the
down
institutions we
0.3%.
regulate are aware of and understand the risks that they run, including risks from climate.
And that they're prepared, and learning how to, as would be the point of a pilot, learning how to mitigate those risks over time. So what criteria will you use? to
Macro note,
evaluate
Axios
whether or not
reporting
you
progress has
run
been
the
made in
exercise
talks
again
in Cairo
and/or
over the
share
Gaza hostage
more
and
broadly
ceasefire
the
deal.
results of that exercise?
I think we
It
did
would be
publish
ZIM.
most of the
Seen
results of that
activity in
exercise. So
USO.
I don't know what to say about that. We're looking at it and we're asking ourselves, what did we learn? What do we need to learn next time? So, I'm not exactly sure what factors we'll be looking at, but we'll be doing a careful assessment of what more we need to do.
Thanks. Thank you, Mr. Chairman.
Senator Haggerty is recognized.
RILY, nice pop.
Thank you, Mr. Chairman. Chairman Powell, welcome. Chairman, last week in Portugal, you said that you wanted to be, quote, more confident that inflation is moving sustainably down before you begin to cut rates. You also said in your testimony that you need greater confidence and more good data before lowering rates. Can you give us any color as to what it is you're looking for in the data and how long it might take us to get there?
We need just to see more good inflation data. That's all. We had 7 months of good inflation data at the end of last year. Then we had a quarter, really a month or so, where inflation went up, and now we had one really good inflation reading and one pretty good one.
SNGX,
We
maybe
just
a
need to see more so
5-minute
that confidence
build
rises.
here.
I'm not going to tell.
Are we weeks away, months away?
Yeah, I mean, I'm going to try to avoid sending any really specific signals about time today because it's going to depend on the data. It also matters what's going on in the labor market, though. We've also said that if the labor market weakens unexpectedly, that could be a case for loosening policy as well. Really, we're weighing both those factors.
Here's one of my concerns. Yeah, I'm sure you probably share it, but we're coming off of a 40-year high in inflation. We've seen the rate of inflation coming down, but we haven't gotten to the 2% target. And my concern, for lack of a better term, is whether or not this might be transitory in terms of the data that we're seeing right now.
That's exactly why we're approaching this question carefully.
I thought that might be your answer. Thank you, Mr. Chairman.
ATNF.
Can we shift now to the issuance of Treasury debt? The Fed is the largest holder of Treasury debt. In February, you and I talked about the pressures that our fiscal deficit is exerting on interest rates, which by extension makes your job more difficult. I'd like to talk this time about how Treasury issuance is impacting our economy and our monetary policy. First, just a basic question. If Treasury issuance were to shift drastically, either to the long end or the short end of the curve, would that affect interest rates? Or maybe more simply, do changes in supply across maturities impact interest rates on the yield curve?
I mean, I think in theory they can.
Yeah, I agree. As you know, the Treasury Borrowing Advisory Committee recommends that T-bills comprise between 15 and 20% of total U.S. debt. Right now, the Treasury is issuing T-bills significantly above that recommended range. Some people, including myself, believe that this is being done to artificially stimulate markets in the run-up to the election. And it's shocking how little attention this is getting. Any manipulation of debt management of this nature stimulates inflationary pressures and increases taxpayer burden because it's higher
Fifth Third Bank
cost to
enters
issue
into
these
settlement
debts.
with
So given that
the
Treasury is issuing
Consumer Financial Protection Bureau,
which
agreed to
pulls
pay
down
$15 million
longer-term rates,
fine for
isn't it
sales
working
practices
at
and a
cross
$5 million
purposes
fine
with
for
your
auto
monetary
finance
policy goals of taming
services
inflation?
activities.
So
That's
we take
Foxtrot,
we
India,
take Treasury's
Tango Bravo,
debt management
FITB.
decisions. We don't comment on them. We just do our job.
No, I'm not asking for a comment on their decision, but just as a simple mathematical truth. If they're pulling down demand on the long end of the curve, doesn't that?
I wouldn't say that
contradict
has important inflation implications. No.
It just feels to me the same way that the Biden administration drains the Strategic Petroleum Reserve, that undermines our ability to respond to energy shocks. When the Treasury manages its debt in this manner, it constrains our ability to respond to future economic shocks. And that opens our nation up to very real risk. Whether it be amplifying the effects of the Fed's balance sheet reduction, flooding the supply of one of the most important short-term debt instruments, the risks seem to me to be mounting for Treasury market disruption. I'd like to know what your thoughts are, Mr. Chairman, about how the Fed will navigate this and whether you've had discussions with the Treasury about this growing dangerous dynamic.
No, we don't have a seat at the table on Treasury debt management. Treasury makes those decisions, and they don't have a seat at our table on monetary policy.
I just think
We don't
the
have a
risk
seat
is
at their
very
table.
obvious here, though, where we're headed with this type of portfolio
Honestly,
management.
it's just, it's completely out of bounds for me to comment on Treasury debt management in any
Well,
way.
I think you've been dealt a very difficult hand here, Mr. Chair. The Biden administration's policies aimed to gin up the economy ahead of the election. These efforts directly undermine your policy goals at the Fed. That includes excessive issuance of short-term debt. Think about it, Freddie Mac's backstop of second mortgages, unlawful student debt loan cancellations, the draining of the Strategic Petroleum Reserve to suppress fuel prices, and President Biden's own jawboning of the FOMC to lower rates. As you know, the Federal Reserve was structured to shield monetary policy from political influence, and that independence has given the Fed unique credibility in executing its mission. If the FOMC were influenced in any way by political calculation rather than economic data, it would severely damage the Fed's credibility as an independent institution, it would increase uncertainty in our markets, and it would jeopardize the dollar's status as the global reserve currency. Thank you, Mr. Chair.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. When the CEOs of giant banks can boost their bonuses by getting the banks to take on more risk, they run the risk that they will end up running their banks into the ground. It happened in 2008 and it happened again in 2023. Back in 2010, though, Congress passed the Dodd-Frank Act. Section 956 told financial regulators, solve this problem. 2 months ago, regulators put forward a proposal, but the Fed refused to join. Now, in 2018, you told this committee, Mr. Chairman, that you, quote, expect that banks will have in place compensation plans that do not provide incentives for excessive risk-taking. In other words, you trusted the banks to write their own rules. So let's see if they actually
Trying to wind
have.
up out of this range
One
here.
thing the proposal would do is
grinding
require
up right
big
now.
banks to delay bonuses for a broad group of critical employees who are able to gamble with the bank's finances, like the head of a trading desk, for example. Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks have put policies in place to delay annual bonuses for this broader group of critical employees whose risk-taking could endanger the bank?
I don't know specifically. My guess is all of them. Since the
So
financial crisis.
you're the regulator who said trust the banks to self-regulate so we can avoid another financial meltdown or another bailout. And you don't know if they did or didn't do that?
Well, you make it's a very, very specific,
Yeah,
narrow
it is a
question
very
you're
specific
asking
thing,
about.
because it's something a regulator should do. You think the answer is 10 out of 10? The answer is 0 out of 10.
Yeah, I doubt that.
Well, go back and look. 'Cause we've looked at
shots
those statements
fired.
on this.
Let's take a
Another thing
VVPR,
the
Victor
proposed
Victor
rule
Papa
will do
Roma,
is
Romeo.
require the banks to
That's
consider
chat room
flat-out
circulation
banning
attempts,
bonuses
VVPR.
and bonus pay for executives who took risks that
Damn.
threatened the stability of the bank. So let me ask you this one, Chair Powell, in the 6.5 years since
doubt
you
that.
said trust the banks to regulate
Damn.
themselves, how many of the 10 biggest banks now have policies that would require them to flat out deny bonuses to executives that have engaged in inappropriate risk-taking?
I don't know the answer to that. By the way, I never said trust the banks to regulate themselves.
I'm sorry, do you want me to go back and quote you again exactly?
Trust the banks to regulate themselves?
When you say, I expect that the banks will have in place compensation plans that do not provide incentives
Crude
for
futures
excessive risk
sharply
taking.
lower.
Right,
They're
pursuant
now
to
81,
pursuant to the guidance
63,
that we issued
down
in 2010,
8.6%.
which is quite
And
detailed.
you have not issued a guidance since you made these comments, since you became chair. And how many banks have actually put in place the regulations that you said, I expect the banks will have in place? The answer is, out of 10,
It was covered
0.
by the 2010 guidance.
No,
actually.
you said in 2018
Oof, getting
that
heated
they
here.
would put these
I
in
said they would
place.
have in
and
place.
no, that is not what you said. So
Oof.
look, Chair Powell,
Hot damn.
the last guidance on this subject, as you say, was in 2010, which is before you were at the Fed. The Fed has now refused to join the other financial regulators in finalizing a rule implementing Section 956 as Congress directed. So my question has been, how many of the 10 biggest banks have done this? And the answer is 0. Dodd-Frank was passed 14 years ago. There are still no rules to stop banks from rewarding executives' risky behavior. When you were asked about these Section 956 rules or lack of rules in March of this year, you said, quote, that you wanted to understand the problem we're solving before proposing a rule. Chair Powell, the law does not say Jerome Powell, in his infinite wisdom, should decide if we have a problem with executive compensation. The law passed 14 years ago says executive pay is a problem that threatens the stability of our economy, so write the rules to rein them in. Finally, the other financial regulators have proposed such a rule, but the Fed has not joined. Chair Powell, I understand why the 10 biggest banks in the country like your approach. You let them do whatever they want.
1 minute left
but you
on
don't
this
work for the
5-minute
giant
insight
banks.
candle.
You
Probably
work for the
rips
American
or dips
people.
off of it.
I urge you to do your job. Thank you, Mr. Chairman.
Senator Vance from Ohio.
You know he's
Thank you,
saying
Chairman,
some
and,
choice
Chair
words
Powell,
in
for
his
being here.
brain right
Appreciate the
now.
files last week to discuss some of these issues. I wanted to ask something I imagine most of my colleagues are not asking, which is the relationship between immigration, particularly extremely high illegal immigration levels under the Biden administration, and the persistence of the inflation problem. And I recognize this is not your policy focus, but you are the Federal Reserve Chairman.
10 seconds.
So
just hold
I just want
out.
to get your views on this. And
Piece of
in
junk.
particular, I want to read you a quote from Mickey Bowman, who's one of your governors.
Wait here for a
And
second.
this says, in a quote, "There's a risk that increased immigration and continued labor market tightness could lead to persistently high core services inflation. Given the current low inventory of affordable housing, the inflow of new immigrants in some geographic areas could result in upward pressure on rents as additional housing supply may take time to materialize. With labor markets remaining tight, wage growth has been elevated at around or above 4%, still higher than the pace consistent with our 2% inflation goal, given trend productivity growth." The Bank of England, I believe, produced a recent report on this issue in the United Kingdom, obviously a different economy in a different country. But what do you see as the relationship, in particular, given that housing is such a big driver of the inflation that we've seen in the last few years? As Senator Haggerty said, the highest in 40 years. What role do you see illegal immigration playing in driving up housing costs, which of course is a main driver of inflation for American citizens?
Let me quickly start by echoing your first comment, which is we don't comment on immigration policy, but we do comment on inflation. So I would say this. Many people came into the country over the last couple of years, many of them through asylum requests, and went to work. Labor supply increased a great deal. It's not, there's no clear answer, but my sense is that in the long run, immigration is kind of neutral on inflation. In the short run, it may actually have helped because the labor market got looser because there were more people. But to you're talking about housing specifically. There will be, I'm sure there are places in the country where new people coming into the country, I'm sure you can find places and they exist where that will have contributed to an already tight housing market.
Every time I saw something, it goes up higher. You're welcome, everybody.
I wouldn't say it's a driver one way or the other.
So I want to follow up on that thread, but just on that topic of particular areas that have been affected. Chairman Brown, I'd like to ask unanimous consent to submit a letter for the record from the city of Springfield in our state, the southwestern part of our state, which I think highlights a very real example of this particular concern, straight from the horse's mouth itself. Now this letter, I want to quote from it. "Springfield has seen a surge in population through immigration that has significantly impacted our ability as a community to produce enough housing opportunities for all. Springfield's Haitian population has increased 15 to 20,000 over the last 4 years.
Ticker Kava, CAVA shares continue to see heavy activity, new lows for
Putting
Kava.
a significant strain on our resources and ability to provide ample housing for all of our residents." And end quote there. And Mike,
Without objection, so
Thank you. In my conversations with folks in Springfield, it's not just housing. They're trying to build 5,000 new housing units, which is a very Herculean task in a town of about 55,000 people. But it's also hospital services, it's school services, there are a whole host of ways in which this immigration problem, I think, is having very real human consequences. But if we go back to just one other question, Chair Powell, on this immigration and labor supply question. So one of the euphemistic ways in which economists, I think, sometimes talk about labor supply and immigration is they'll say something to the effect of, well, an increase in labor supply has put downward pressure on labor prices. And what they're effectively saying is that increased immigration has
Chair
put
Powell
downward
says my
pressure on
sense
the wages of American
is that
workers.
in long run immigration is neutral on inflation. Says my sense is in the long run
and
or in the short run, it may have
outside
helped.
of the Fed talk about
Will be places of the country where immigration has
and the fact that
contributed to
I
an
think
already
admittedly
tight
has
housing
put
market.
downward pressure on wages. Okay, so there obviously that has put some downward pressure on inflation, but it also puts downward pressure on the wages that people earn to pay for their families. Why do we see that as a good thing? Or maybe that's wrong. Maybe the premise is fundamentally incorrect. But why do so many economists treat an influx of new labor as a good thing? If labor is constrained, labor supply is constrained, doesn't that lead to rising wages for American workers?
So I'm certainly not trying to put a value judgment on it. I will say that this is all happening over the last couple of years in a context of an extremely tight labor market. Now a little bit less tight, significantly less tight, but you've got a worker shortage. You've got businesses who have jobs that are open. You have, more than one job opening for every unemployed person. So you've got a very tight labor market, and it's addressing that. And we're having wage increases are still very high, but they're coming down to a more sustainable level.
Fair. And Mr. Chair, I know I'm over time. Could I just one more question on this? Thank you. I understand your point, Chair Powell, and again, I'm not ascribing value judgments to you, but if we say we have a really tight labor market, and we say that there are more than one job openings per worker, there are two ways you could plausibly solve that, probably more than that, but two obvious ways you could plausibly solve that. One is through a new influx of workers via the immigration system. Another way is by raising wages and bringing some of the workers that are on the sidelines. I think specifically of the 7 million prime age men that have dropped out of the labor force. Like, why isn't that more the focus of policymakers rather than, you see a labor shortage, rather than bringing in a large number of new immigrants, why not try to boost wages in a way that brings some of those workers off the sidelines?
I use this account like a
that seems to be a much better focus for my
bank account. I need to fill up my gas tank and use this account. If I need to go buy some barbecue stuff, I use this account.
Thank you, Mr. Chairman.
Grocery shopping.
Maryland's recognized.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you. And let me first applaud you and your team at the Fed for, at least so far, being on track to bring down inflation without, so far, triggering a surge, big uptick.
Not watching the hydrogen-related issues as Elon Musk tweets hydrogen is silly for cars and only barely sensible for rockets.
With full awareness of that danger. When you were here in March, you said that you were, quote, well aware, unquote, of the risk to unemployment of waiting too long to cut rates and, quote, very conscious of avoiding it, unquote. Since then, we have seen a slowing in the economy and a rise in unemployment. I'm just reading something today, an analysis with Diane Swank, KPMG's chief economist, who summed it up by saying, quote, the ice is thinning, red flags are emerging for the U.S. economy,
Mountain
unquote.
City?
The engine of the economy, the labor market, is cooling faster than
is.
previously known. The unemployment rate is above 4% for the first time since 2021. It is taking workers longer to find jobs. Economic activity in the service sector, which is responsible for 2/3 of economic growth, slowed in June. So my question, Mr. Chairman, is how do you take all of these factors into account? Do you share my concern that as of today, there is a real risk of a increase in unemployment?
Kava had that chance yesterday to break out and couldn't do it.
Radar screen?
That's when I bailed, right?
Yeah, I mean,
Things throwing up now.
I do.
Tested that lower
even more
Bollinger
so than
Band.
in March when we were here. See that.
And you kind of
So
see
we've
the
seen-
divergence
I think
here on the daily
latest,
chart as well.
Data show that labor market
Right, on
conditions
the
have
Stokes
now cooled
anyway.
considerably from where they were.
High,
2 years
lower
ago.
high,
I
lower
wouldn't have
high.
said that until the last couple
Got
of readings.
high, higher,
and
high,
I would
higher,
say
high.
also that for a long time, the risks were more that we would fail to hit our inflation target. I think the risks as to the two statutory targets we have, price stability and maximum employment, I think those are coming much more into balance. My colleagues and I are looking at that, and we fully understand that we have to manage this.
The hell was that?
Process of administering
Is that
federal
the viewer
funds
tax
rate
shit?
and deciding what to do with it in a way that manages both of those risks. And the two mandates are equal under the law, and so yes, we do get that.
Well, I appreciate that, and I appreciate the fact that you've seen that that calculation change since you were last here, because I think the data indicates that we are at risk now of not acting soon enough to curb the increase in unemployment, and that if we allow that to go too long, we may see a real uptick there. And so I'm pleased that that is very, very much on your radar screen, and hope that that will be a really deciding factor as you and your
Fed Chair
other
Palace's last
Fed
couple of
colleagues
readings
determine
show
what
labor
to do,
market has cooled
with
considerably.
respect to
Says
interest
dual
rates.
risks
And as has
coming
been said in the
much more
housing
into
sector,
balance.
we are seeing the continuing drag created by high interest rates. So that has been I think all of our colleagues, as you probably heard today, are really hearing from our constituents, understandably, about the very high housing prices, and it's slowed investment in other sectors like manufacturing as well. In my final minute, I would like to turn to the question that Senator Warren asked, because I asked your colleague, Vice Chair Barr, about exactly this question of implementing Section 956 of Dodd-Frank when he was before the committee just a short time ago, May 16th of this year. And I asked him about why the Fed had not moved forward along with other agencies with respect to implementing what the law is and what the law has been for 10 years. NCUA has signaled their intent to propose a rule. The SEC has indicated that they're moving forward. I said to Vice Chair Barr that I've not seen any notice of proposed rule from the Fed, and can I get a commitment that the Fed will quickly begin the process implementing this law by issuing a notice of proposed rule? His answer was, and I'm quoting, "In discussions with my colleagues, it became apparent that at the board, we believe we need to conduct some further analysis before deciding what steps to take. We are committed to following the law, to implementing Section 956, but we have further work to do." Count me among those who are very frustrated that we're now 10 years after this law was passed. Vice Chair Barr committed to following the law. I'm sure, Mr. Chairman, you would commit to following the law. But why is it that it's taking the Fed so long to move forward with implementation of 956?
So I like to look at the actual language of the statute when and what it says is it calls on the regulators to make determinations about specific incentive compensation practices that cause excessive risk taking, and we haven't done that. We did. You know that we put in place pretty serious guidance back in 2010 after putting it out for comment. We looked at all these questions. It's been in place for 14 years. We supervise on it, and so the question I'm asking is, okay, let's go out and look at what the practices are that are happening now, not that are happening before the global financial crisis when it was obvious that things needed to be changed, and we put the guidance in place. It seems to have largely worked, certainly as it relates to the large firms. And then let's design something that is designed to the residual risk, as opposed to just taking something off the shelf from 15 years ago and doing that. So and we're working on that at the Fed now. And again, the statute requires us to prescribe regulations or guidelines to prohibit those things, and I want to do that. In a sense,
so
we have done it.
just very briefly, and is it your testimony that the Fed has already met the requirements of site? Okay.
No.
Just want to make that clear, and we do look forward to the Fed moving forward. Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Brett from Alabama is recognized.
Thank you, Mr. Chairman. Chair Powell, thank you for being with us today. My colleague from Maryland actually just touched on something, but as I was listening to the exchange from my colleague from Massachusetts and her closing remarks, particularly about Dodd-Frank and 956, there was also a comment at the end where she mentioned you working for giant banks versus the American people. Now, I have a long list of questions I want to talk to you about, but I did want to get you to respond to that.
Yeah, that's completely untrue. The things that we're doing are consistent with our international obligations, and they're meant to be the best thing for the American economy, and that's really our only consideration. We have policy differences across various things, but we're all trying to achieve the best results we can for the people that we serve.
Absolutely, thank you. Chair Powell, I have repeatedly talked about my concern with long-term debt proposal, and just think that it has not been well thought through. First, I have concerns that it blatantly undermines the tailoring requirement, and on that note, do you believe that 2155 will be applicable to the long-term debt requirement?
I think it applies to everything.
Absolutely.
And on the long-term debt requirement, we have voluminous comments that we're
Voluminous.
looking at carefully and thinking through the process of what to do about them.
No, I appreciate that because I do believe that currently it lacks a real cost-benefit analysis, and I think it really does need serious reconsideration. And additionally, when you take a look at it and its overlapping nature with Basel III, it seems inappropriate that we would move forward with a new long-term debt proposal, finalizing that rule when we don't even really understand what Basel III is going to mean for capital requirements for banks and obviously financial institutions. So my question for you is just that. Would it be inappropriate to move forward with the long-term debt proposal, finalizing that rule prior to Basel III being finalized as well?
18F still ripping.
I don't know that I would give you. I can't give you a clear answer on that. It will depend. I mean, Basel III won't be finalized for some time, but that's not to say we wouldn't reach a place where people understand and accept and support what it is that we're doing. And I think at that point, we could certainly move forward with other rules.
I heard you mention to one of my other colleagues that probably by the time this all took place, it would be the beginning of next year. I would just say my concern, the Fed has said that the long-term debt rule will directly be impacted by the final Basel product. And so, why would it be inappropriate or appropriate to move forward with that before banks can fully understand what they're facing from Basel? So I would just ask that y'all are thoughtful about that. These are a lot of
Ticker
things that we're
RTX,
dealing
Romeo
with, trying
Tango
to
X-ray,
really
sure, seen
understand
spike in
the
activity,
implications
new
of-
highs.
and I think we have seen consistently
No,
that
RTX
people
is
are
set
not
to near
taking
deal
a
to sell
look
Collins,
at the
hoist, and
cumulative
winch
impact
unit.
of these things and not really taking a look at the trickle-down effect. And on that, on Basel, when you testified in March, you said the Fed was aware and fully considering
Watching
the potential
RTX shares,
impacts of a proposal
seen a
on our
report that the company is set to near a
commodities
deal to
markets. And I
sell
do want to talk about
Collins,
that.
hoist,
The commodities
and
market,
winch
our
unit.
agriculture industry is one in
Romeo
5
Tango
jobs in the state
X-ray
of Alabama. It's
RTX.
20% of our economy.
That
I am a
from
big believer
Bloomberg.
food security is national security, and the proposal would increase hedging costs by 80%, meaning banks would be far less likely or inclined to offer clearing services. So this could have a detrimental effect to our agriculture community and increase other costs providing food and fiber for our nation. When you look at inputs such as feed, seed, fertilizer prices, those have skyrocketed, and prices have ended up just getting passed down to the consumer. I mean, grocery prices are up 21% since January. So do you believe that the revised Basel proposal will alleviate these concerns that our farmers and our ag community have had about Basel III? And has the Fed done anything specifically to take a look at this? And if not, will you commit to doing so?
So I don't want to get into the specific changes that we're going to make. I'll just say that we're very well aware of and very focused on that particular set of changes and, you know, paying close attention to the issues you've raised.
I appreciate that. And I also hope that the Fed when you craft these types of regulation, you really consider the relationship between the economic impact and the ability of community banks to serve their communities as well. I have heard you mention that to another one of my colleagues, so I know that you're committed to doing that, but that is incredibly important to Alabamians and our main streets all across the state. In my last few seconds, I want to touch on one more topic. So finding solutions to expanding affordable childcare is a top priority of mine, and it is something that I know a number of my colleagues on the other side of the aisle share an interest in and believe is an important issue as well. So Chair Powell, do you believe that increasing access to affordable childcare would positively impact labor participation in our country?
I do believe that.
Thank you.
What kind of question was that?
Stowe of Nevada is recognized.
Thank you. Excuse me, Chairman Powell, thank you for joining us, and I always appreciate visiting with you in my office as well, and your comments.
Whoa. Calm down there.
Over the past 2
Holland.
years, you said the economy has made considerable progress toward the Federal Reserve's 2% inflation.
Kids are watching.
Labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. And what we know is that since Biden came into office, the United States has added over 50 million jobs. Under President Biden, we had 41 consecutive months of job growth, and you just said it again here today, that wages are up as well. Average U.S. wages and salaries grew by nearly, 16,700 between January 2021 and April 2024. So would you agree with the statement by a ranking member earlier today that the U.S. has the greatest economy on the planet?
I certainly would.
Let me ask you this. Jumping around, and there's been talks today about the Fed's independence and how important the Fed's independence is. The Wall Street Journal recently reported former Trump administration officials drafted policy options to weaken the independence of the Federal Reserve if President Trump were to be elected in November. Allegedly, former administration officials discussed policy options to erode the Fed's independence to make it easier for a president to impact interest rate decisions or fire the Fed chair at will. Chairman Powell, how important is it that the Fed has independence to provide economic stability and anchor our inflation expectations?
So I think it's actually essential. It's literally essential. And the good news is I think that's pretty broadly understood, and particularly on Capitol Hill, on both sides of the aisle. I believe that people do understand that
like
we need to do our work in a way that's outside the political process to the maximum extent possible. Of course, we need to be accountable and tremendously transparent. If you look at the box in the Monetary Policy Report on central bank independence, it's really a box about transparency. That's the other side. So I think it's really important. I think it's an institutional arrangement that has served the public well. And and I do believe that there's pretty wide support for it.
And you just said it has been intentional and institutional arrangement over the years for this very reason, correct?
Yes, this is a choice that we make, and I think it's countries around the world, advanced economies, have all made this choice effectively, and the results are clear that you now have independent central banks, and you have better anchored inflation expectations, and you have better performance on inflation and better performance in the economy generally, which isn't to say there won't be shocks and crises and that kind of thing.
And then let me touch on a subject that one of my colleagues just talked about, because I was going to ask about this, which is our immigration. In Nevada, immigrants are extremely important for our economy. They're essential workers, doctors, nurses, and teachers in my community. Can you, without getting into other
Spain, good game,
ancillary issues that don't impact what you do, can you talk about and elaborate on how immigration affects the employment rate and why you look at it and for what reason you look at the immigration issue?
So we don't, as you, just to make the point that you made, we don't take a position, we don't comment on immigration policy. We have no responsibility for it. It's not our job. But so we just look at the numbers and we sort of try to assess the economic consequences of immigration. And over the last 2 years, 2 years ago, we had an economy where we really had a labor shortage. And what's happened is we've had a wave of immigration, and many of those people have gone to work and gone to work legally through the asylum process. Not all of them. There's also a group that has not been legally processed, but many of this latest group have been have sought asylum and gone through the process of getting a work permit. So what that means is that employers wanted workers, and there were more job openings than there were people actively seeking work or working. And so now you have a new supply of workers, and they've filled those jobs. So we have a bigger economy, but it's not a tighter economy because labor supply has increased the economic capacity. That's just the arithmetic. That's not saying it's a good thing or a bad thing. There are other policy choices that could be made, and they're not for us to make.
When you say greater economy,
A larger economy.
in other words, it has improved the growth of our economy.
The economy grew 3.4%, I believe, last year. And some part of that was that, as Congressional Budget Office analysis showed, and to many surprise, there had been a really significant uncounted group of workers coming into the country who had gone to work. And that's part of the story of how the economy managed to grow that much while inflation was coming down pretty sharply. Inflation came down 2 full percentage points during 2023 while the economy was growing at 3.4%. So, and while these people were coming in. So that is part of the explanation for why we had such an interesting and pretty good year in 2023.
Thank you.
Senator Kramer of North Dakota is recognized.
Hi, Mr. Chairman. Thank you, Chairman. As always, all of my prep goes out the window with the last question. So on the legal immigration workforce front, and I know this isn't your bailiwick, but the issue of workforce is important to the economy. I would submit to my colleagues, beyond even the people who come here seeking asylum suddenly being available for the workforce, we have 1 million plus people who we welcome in legally every year, the vast majority of whom don't come in with a job or even a skill set. And we have so much work to do, colleagues, on the legal immigration front to create a connection between economic demands for workers and the skill set and education that our immigrants bring to us. So most every other country requires some sort of skill set useful in the economy. We don't do much of that. So that's just my speech for the moment. I know, Mr. Chairman, you've gotten already lots of very specific questions, and I've heard a couple of them on Basel III. So I'm just going to make an illustration, and you can comment on it if you'd like. But there's a large generation and transmission utility in North Dakota, Rural Electric Cooperative, Basin Electric, very large G&T, members all over the upper Midwest. And they recently testified in front of the CFTC on Basel III, and they expressed a concern about how operations would be impacted if lending was curtailed or limited in any way. And they gave a real-world example, and I want to just give you that example. Now, remember, this is an electricity supply that we're talking about. It's critical it remains reliable. It's critical that it remains affordable. And part of an electric cooperative's risk management program, of course, is how it buys the fuel that generates the electricity, in this case, natural gas. They may buy natural gas in advance at a fixed price, realizing natural gas is one of those commodities that goes up and down in pretty big swings at times. But they can hedge by buying it at a fixed price for a power plant. Man. And it protects the cooperative financially, since electricity prices, again, follow those spot prices generally. So if spot prices spike, so do electricity prices. However, with a natural gas hedge, the cooperative can generate electricity at a lower fixed fuel cost, protecting itself and its consumers from high prices. It's an upfront cost on the balance sheet between the cooperative and its bank, but it protects the reliability and affordable supply of electricity. I give you that very specific example, not even to mention that the cooperative model itself has some unique qualities about it. If you would like to comment on it, you've already stated that there are going to have to be changes. I just throw that into your box of things to think about.
HELE, finally
welcome
breaking.
to comment if you'd like.
I'll just say we're well aware of that issue, and I appreciate you bringing it up.
Thank you, Mr. Chairman. With that, then, I'm just going to speak to this independence issue. I think that the senators that have questioned you on it are correct. I share that concern, as you know, that the independence of the Fed is essential. I have resisted moves within my own party to change it. But those moves are very narrow and not very, I don't think, very realistic. And I appreciate you pointing out that from what you can tell, at least on Capitol Hill, we're all pretty much united on that front. Perception does matter. It matters a great deal. And you and I have had discussions over the years on, you were very, you admonished us strongly as Congress to spend what we needed to spend to get through the pandemic and to maintain the economy. I think you were right to do that. You were just as aggressive in not responding to calls to rein it in a little bit when Democrats brought the Inflation Reduction Act and the American Rescue Plan to the forefront, and I think really basically hijacked the economy and put fuel on inflation. But perception matters, and so I would just submit to you, and you haven't said you're going to do this. I don't have any reason to believe you'll do this, but any move to lower interest rates or move interest rates either direction before November 5th could certainly be a bad perception, even if there's a strong push to do that. I know you understand
So
that,
don't cut interest rates if the economy looks like it's about to fall apart because we're worried about the election.
I think neutral is a good place to be. And by the way,
let it suffer a
you have
little
one of those
longer,
jobs
and
where being
then
boring is one of the most noble things
you can dick around.
So great job.
So let the American, if it's really going to shit,
Senator Warnock,
just let it go to shit.
who's decidedly not.
Wait for elections over, because us not tampering with it wouldn't
Thank you very much, Mr. Chairman.
be construed as tampering with it.
Monetary policy report shows inflation is in housing costs.
How did I get? I mean, for crying out loud.
But many Georgians still feel the
Double top
sting
tick.
of unaffordable
Unbelievable. And now you're going to go lows here.
One reason for this,
Suck a
you know, I've
dick,
discussed
man.
this, is
Absolute
that
horseshit fill. Double top tick. And then
study
dip.
published in the Journal
Like,
of
suck a
Economic
dick.
Geography found that for every 10% increase in the housing stock, rents decrease
Crying out loud, man.
by 1%.
And 50K Curse is trying it.
We've
They're
discussed
trying it.
this issue, particularly the effects of housing supply on housing costs. And we agreed that while the Federal Reserve does not control housing supply, it can help create the environment that encourages the construction of new housing, particularly affordable housing. Chair Powell, how has the Fed been working to foster an environment that encourages home
There's a
construction?
41 and 44
And what,
level here.
in your view, are the challenges that remain?
Basically 44.
So, I mean, in the long run, the absolute best thing we can do for the housing market and for
I took it to ZVSA, Zulu Victor,
sustainably
Sandy
bring
Alpha,
inflation
sure seeing
back
continued
down
heavy
so that
activity, new
people
highs
aren't
for
talking about it
ZVSA.
anymore. And it's just assumed by everybody in their daily lives that inflation will be around 2%, so we don't need to talk about it, which is where we were for a long time. We want to get back to that. Interest rates can come down then, and the housing market can return to the state it was in before the pandemic, which was to say really tight. We don't have enough housing, and that's not really a monetary policy issue. In the short term, though, I would say tight monetary policy weighs on the housing market. The policy works through interest-sensitive spending, and housing is definitely at the top of the list of interest-sensitive spending. So we understand that we're suppressing. Not suppressing, but our higher interest rates, have led to lower housing starts and lower activity in the housing market. But we're doing that to get back to 2% inflation for the whole economy, so that the housing market can be on a better foundation.
Well, yeah, and related to that, when you have these high interest rates, of course, you see across the country, but particularly in a state like Georgia, these institutional investors who are coming into the space and they're buying houses in all cash, boxing out first-time, first-generation home buyers. And of course, the conditions for them doing that improve to their favor with higher interest rates. Would you agree with that assessment?
I know some of that's happening. I don't know that higher interest rates make it. I mean, some of that's, they're working with.
Well, you got higher interest rates and you got institutional buyers who can purchase at all cash. Doesn't that
But
further?
they have to borrow the money at higher interest rates. I'm just saying higher interest rates doesn't make their investment any cheaper. And notwithstanding, I understand it's a sensitive issue, and in most markets, it's still a pretty small portion of the outstanding housing stock. But it's not an issue. It's not an issue for us. You know, they're a legal buyer of housing. Our job is really the whole economy.
And that
I mean, it's more of a question for legislatures.
So how can the Fed better deploy its
Get a
monetary
5-minute
tools
cock
to
here.
ensure that we are meeting key
Give you a
inflation
say?
objectives
Yeah,
like
see that.
housing affordability?
You know, I think the best thing we can do is to is kind of what we think we've been doing, which is to move carefully as we think about loosening policy and make sure that we do that when we've got greater confidence that inflation is moving sustainably down toward 2%. We're also keeping a close eye on the labor market, and if we see unexpected weakening there, then we could respond to that too. But that's really the best thing we can do for the whole economy and very specifically for the housing market too.
You well point out that you're limited in terms of your influence there, and there is a role for Congress to be sure, which is one of the reasons I wanted to be on this committee to introduce a down payment toward Equity Act with my colleague Senator Butler. This bill would help first-generation home buyers compete with Wall Street institutional investors by helping with down payment costs, closing costs, and costs to reduce interest rates. I look forward to continuing productive conversations with you and looking at how we can make housing more affordable for all Americans. I'm running out of time here, but one of the other concerns that I maintain is with respect to reducing the racial wealth gap. Is this issue around home appraisals. And the Fed is part of the interagency task force on property appraisal and valuation equity. What expertise and perspective has the Fed brought to this task force? You know, how are you responding to this issue of home appraisals?
So, as you know, we've been an active participant in that task force, and we bring all of the expertise we have in the housing market as well as regulatory, supervisory, and economic expertise generally. As we look at that, and I'll also say that our strongly held view is that discrimination has no place in the banking system, and that includes appraisals and other valuations.
I agree with that, and quickly, I was
Let's take our
glad to
Key
see
West,
that
Quebec,
CFPB
Sandy, shares seeing a spike in activity, new
finalized
highs.
a rule that creates strong anti-discrimination standards for automated home evaluations. The Fed has not yet approved this rule.
dick.
Why not, and does the Fed plan to do so?
Sorry, why do we?
You've not yet approved the rule that was made, that was suggested by the CFPB. They finalized the rule.
But do we? Sorry, I'm not aware that it's a rule that we.
Tesla's
have to
not the same
finalize
stock.
too.
Tesla's now a 3 billion share
That is
float.
my understanding.
I will.
Not
let me
a
follow up
200
with you on
million
that.
share float.
I'm not aware of that. Okay,
Thank you.
I suck at trading this thing.
Senator
Doesn't move
Daines
the
of
same.
Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here today. Certainly, it's not lost on anybody here. Election season's in full swing. And so from now until Election Day, my Democratic colleagues in Congress, as well as the Biden-Harris administration, will waste no time attempting to sell a fairy tale to the American people that financially and economically, they are better off now than they were almost 4 years ago. When President Biden took office, inflation was at 1.4%. His failed policies drove us to the highest inflation we've seen in 40 years. I can tell you the folks back home in Montana aren't fooled, because in every part of their lives, inflation is not some kind of hypothetical. They see the everyday impacts of the decades-high inflation brought on by the policies of the Biden administration and facilitated by congressional Democrats. The cost of most goods and services across the economy are more expensive than they were in 2020. And that is a fact that no amount of political spin or mental gymnastics can make go away. Here's just a couple of examples. Breakfast cereal. Prices have increased 28% since January of 2020. Gas prices increased 36% from a national average of $2.63 a gallon to $3.58 $3.58 per gallon. Egg prices have jumped $3 per dozen in 2024, double the cost of $1.45 in February of 2020. And this dishonesty
Pretty
doesn't
freaking tight
stop
here.
with inflation. On the labor market, while President Biden and Senate Democrats are celebrating a victory lap in light of the recent jobs report showing a 206,000 new jobs last month, they're willfully ignoring the fact that more than a third of these job gains came from the government sector. Mr. Chairman, I commend you for the job you have done thus far in trying to rein in inflation. I encourage you to continue the fight despite the political pressures you may face. I'm also encouraged by the comments you made earlier this month about the dire need for Washington to address its fiscal imbalance. I couldn't agree more. I've said many times and continue to believe that Washington's culture of reckless spending, of excessive borrowing, is leading us down a very dangerous path by leaving future generations with mountains of debt. And I'm happy to hear you agree with that assessment. Mr. Chairman, given that it's an election year, you're undoubtedly facing immense political pressure to lower rates. Thus far, you've done an admirable job in using the tools at your disposal to fight inflation, and I urge you to continue to be led by data and not calendars or political influence. You said as recently as last week that while things are trending in the right direction, you would need to see further evidence before cutting rates. So here's my question, Mr. Chairman. What specifically are you looking at and looking for as we head into the next FOMC meeting, and how do you factor in this recent labor data, and certainly the significant part of that being government jobs?
So we're looking for two things, really. One is just more good inflation data. And we had quite a lot of good inflation data the last 7 months of last year. Then we had kind of a bump in inflation in the first quarter. And now we've had one good and one very good inflation reading. And we need more good data so that we can be confident that what we're seeing is really, that's where inflation's going, that it's going back down toward 2%. We don't need to see it at 2%.
All
right
out,
now we're
you know it's gonna go now.
2.6%. So that's on inflation. On the labor market, to your question, we've seen that the labor market has cooled really significantly across so many measures, and a number of people here today have pointed them out, and the unemployment rate has moved up. You see a labor market that is now pretty much in balance, pretty much where it was in 2019. It's not a source of broad inflationary pressures for the economy now, but it's still a strong labor market. 4.1% unemployment is a very good and historically low unemployment rate. So we
Some
want
stocks that are moving higher in the last few minutes. Coinbase, ticker COIN, up 2%.
If we see that the labor market
HOOD, Robinhood,
which
seen their
is to say,
highs of the day,
more than what we've
up
seen
5%
in a material way.
of the
If we-
$23 level.
unexpectedly, then we could also respond to that because we have a dual mandate, and we now see the two mandates as more in balance than they were a year ago. Really, the focus had to be and was on inflation. Now we need to be focusing on both goals.
Chairman, thank you. I want to get one question on Basel III, and then we will. In March, this committee agreed that it was seriously flawed and needed to be completely rewritten. I was encouraged to see reports last month that the Federal Reserve had provided other financial regulations with possible changes to the proposal. My question is, I continue to believe the proposal should be scrapped altogether, but could you share what changes you're planning to make and the status of the ongoing development of the updated proposal?
So we've had extensive discussions led by Vice Chair for Supervision Barr with the FDIC and the OCC. We've made a lot of progress in getting close to an agreement on a set of proposed changes. What the work that remains is to agree on a process forward. How are we going to move forward? It is our view institutionally that we need to put the changes out for comment for some period of time so that the public, all members of the public who want to comment, can see them again and comment on them again and see them in the context of the quantitative impact survey that we did. And that's the right way to proceed. That's how we would ordinarily proceed, and we don't see why we would deviate from that. And this is the conversation we're now having with
DJT,
the
maybe
leadership
putting
of
a
the
double
FDIC
bottom
and
in,
the
or triple
OCC,
bottom.
And my hope
That
is that we'll
30
be able
area
to
breaks.
come together around
Peggy
a way to
going?
proceed forward, very soon. I'd hope we would have done so by now, but I believe
How
we
did that
will
even
do so fairly soon.
Thank you for joining us today, Chair Powell. I look forward to working with you to
6 and 9 did
strengthen
not show.
this economy. For senators who wish to submit questions for the hearing record, they're due 1 week from today, July 16th. To Chair Powell, please submit your responses to questions for the record 45 days, no more than 45 days from the day
bullshit
you
there.
receive them. Thank you for
That
your
is some
testimony. The
good
committee's
bullshit
adjourned.
right there. Okay, that's over.
Fed Chair Powell
ANVS has
concludes
some
his
price compression
comments
as
on the
well.
committee
Something to watch.
hearing.
I took a ZI Zulu India. Sure seen an increase of activity. Note Betaville takeover note circulations for ZI.
There it goes. RSLS. Hint. Okay.
Ticker EBS, Echo Bravo Sandy. Sure seen a spike in activity. New highs, EBS.
I feel like my RAM needs resetting. My shit on Chrome is so slow. Nice work, Gnome. Nice work. That's some good. Some more. Got 64 gigs. Left my computer on all night, and it feels like I left my computer on all night. If that makes any sense. Yeah, Chrome hogs it. I wish there was a way. And I can't close all. Well, I could close all my shit. That's Chrome. Yeah, let me do that. Let's close all the shit. Reset Chrome. All right. Let's see if that does it. Oh yeah, that's way better. Way better, gooder. LGVN's back at high day. Wow. Pineapple Energy. DJT has a 3008 level. Tesla just going bonkers. IWM. Damn, you're right about that. Compression. We'll see what that does. If and when. Oop. That was a lot of volume. I'm in at 24. Come on. Old top tick again. $23. Should add. Oh, bucked me out and then went, oh. Jeez, it's wild. Tesla, an animal. Back to Green Boys. Can afford Taco Bell. Here's a push. Look at this volume. Very, very different, right? Oh. Really? As soon as I take it?
Hi.
Melly, what's up? 35 freaking months. Go. DJT breaking at 3008 level. We're not going to get a 1 minute cock.
EIA raises its forecast for 2024 U.S. oil production by 10,000 barrels per day. Now expect output to grow by 230,000
I want to see that
barrels
300K
per day
volume
year to
spike
year.
for the next move. Needs to go here. Couldn't do it. ABS spready, but it's breaking. ATNF curl. 1 minute cook.
INTC, U.S. opens $1.6 billion competition for chip packaging research projects. That from Bloomberg.
Ticker TTD, share spike with activity, the trade desk. Josh Brown with positive comments for TTD. It's CNBC Live TV.
KDP, Keurig Dr. Pepper. Josh Brown on CNBC says he's selling the stock. Kilo Delta Papa, KDP.
Mass attack starts in 5, 4, 3, 2, 1. Mass attack.
Ticker VLCN, Victor Lima, Charlie November. Shares seeing an increase of activity, new highs, VLCN.
For those that don't know how to throw that stuff when viewer attack reward is firing, can someone explain it? Because I don't see how to do it on my end. I think there's a box down below in the About section. Damn it, there goes Zap. Jeez. The cooler's in, boys. Tap 14? Of course it did. I should add over 80. Too big of a chicken because I'm shit fill. Fail to go. Could dip if 64 breaks. Oh, second attempt. $44. Suck a dick.
Watching shares of Zoom Info, ticker ZI. Seeing some increased volume here above the $12 level, up 2.6% for Zulu India.
QURE about to go high a day. Damn. Can they not both go at the exact freaking same time? And 1 minute cock. Yep. That's good. That's good. Big shocker there. Oh, SJ's that? Yeah, cuck the bitch. Can't break 50, huh? So we're going lower. By the 9 EMA. Meanwhile, QURE about to go high a day.
S&P futures now moving lower here. Up 0.2% for the day at 56.37.
Happy to get out of that break even. Holy dung. Go back to this one. I really like this. Negative volume. Zap at 14 again. And through 14. Holy horseshit fills, man. God.
Ticker ZAPP, shares seeing a spike in activity, new highs, Zulu Alpha, Papa.
Bills today. Zap testing 14. Going for it. Zap with the juice. Oh, should go. Another 15 test. Broke. Back above. $15.25 break should send it. Looks really good. It's a 1 minute cock. And you're stuffing that move? That is straight evil, dude. Break 15 again. Can't believe they were able to stuff that. Second attempt. Red volume isn't going anywhere. Okay. It didn't launch. Like the one time you get a juicy setup, you don't launch. Okay. You know why it didn't launch? You know why? Now I'm out. Now, you know. Now they know I'm out. Just we're back to green though. How does that not launch? Broke high of day. Doom doom. Doom. Tragic peak. First time chatter, Nevada. I just said Nevada. NVIDIA. Yep, absolute animal of a play recently. A little pullback here. 130 flush. Wow, look at that. QURE. SG and X. S and GX. Got a little price compression going on. Keep an eye on that one. Everything else looks like dog shit. wall bang me? Well, selling your body is a quick way. Or have a big investment in bowling shoes. One of the two. Oh yeah, speaking of the sketch, was there video of him back in his OF days? Or was it just like pictures that came out? I gotta see the video. I mean, I don't want to see the video. But he was all dressed up. I gotta see that. Purify. Pennies. The things people will do when you're addicted to something. Crazy, right? Gifted him a Lamborghini. Like today? No, it's not that he did gay porn. It's the fact that he did it because he was addicted and wanted money for his addiction. Is kind of how I read it. Siru, how do you not know who Sketch is? Oh my gosh, Louis. Okay, brother. Oh my gosh, you guys are freaking... Okay, you're over 50 then. 100%. 100%. I love how he started out his stream yesterday. Damn! 83,000? Where the f*** were you guys in the beginning? I feel like Jinxie. Age of Empires, a solid game. Solid game. Speaking of games that I feel like I had a dream about, I don't even know why. Anybody play the game 500 as a kid? Hello? How have we not reminisced about 500? Golly. Yeah, where you throw the ball in the air and you got a pool of people, a group of people trying to catch it for the points that you call out. First to 500 or more points wins. 100. Everybody fights for it, try to catch it. 200. And then when everybody's close in points, you just... Of course, yeah. Oops, wrong way on that one. Server deal with Oracle? What did he say? It was so quiet. Freaking couldn't hear it. What was server deal? I completely played that the wrong way. mystery and throw it in your homie says it was 500. If I could only hold 3 stocks for the upcoming 10 years, which stocks would it be? Nvidia, Microsoft, I used to not be on board with Tesla, but I think they're going to be the ones that are the fathers of autonomous driving at a retail level. What is the news? I gotta find out what the hell they said here. Oh, Musk's AI, Oracle end talks on server deal. Oh. That is bad. Took it the wrong way. So if this is false news, you'll see Musk tweet about it really quick. And I'm back to like, what, $7 green. Okay. SNGX, there's that break we were just talking about. See this move up to the 90 MA to resume down if it's for real. Nine. You can't break low a day, huh, bitch? bullshit. Don't stop me. Whew. Damn it. Good trade, I guess. Got me back to a couple tacos at Taco Bell. SNGX. Yep, good call. Jeez, look at this move. This is 12. Oh, holy shit. It's a $2 jump. What's the hull level? I feel like I want to be in this. Feels like it's like right here. Dell's supposed to be helping on the data center part of XAI's build outs, Beta Chuck. Bullshit, Phil. Golly. Now it goes down. Okay, makes sense of that one. Makes sense of that one. SNGX 15-second cock here over 1366 firing. Dude, that was a massive move. I can't tell you last time I saw a $2 move in, 3 seconds on a penny stock. That was wild. 36 funds. Here we go. To the curl. It's too slow. I mean, how this right here is 2023 in a nutshell, man. Beautiful 1 minute play. Cuck. Not doing anything for the shorts. Candle over candle by a couple pennies. Fail. Dump. I mean, that was 2023 in a nutshell. It's so much so that I hardly ever played 1 minute anymore because I feel like it's just going to be a sucker, suck in the bulls, not going to go anywhere, going to dump one more time. You nailed it, Hilo. Congrats, man. This shit gives me PTSD, man. Just looking at a 15-second chart here. There is price compression. I'd like to see one more cuck. God, there it is. Now, 1323. 13 hold. In at 1318, not the fill I wanted, but try it. Is that a cuck? Nope. All right. There's 25, 29. Needs to break 50. Not doing it. It's like half at 33, 1333. That was a 46 break. I should get out. I'm going to get out the rest at 1325. Nickel and dime, man. Just nickel and dime. Hey, icy gerbil bait. Next time you hit the sell button, let us know, all right? So we can be able to buy real quick.
You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
No. Money.
LA Genie gifting out the sub. Let's go, bud. What did you train? What did you train? Marco didn't like that announcement. New station in Germany. Leonard, let's go, bud. First time chatter. Love it. Love to see it. Margaret does not like that. Almost like it didn't know that we were supporting a war or something. NATO to appoint senior representative in Kyiv to deepen relationship with alliance. Oh. Huh. Looks very good so far. Extreming 96. Are you only doing day trading or also investing for long term? First day I'm watching you. That's why I'm curious. So we predominantly day trade here, right? We're actively trading the market while it's open. We do talk about long term investing, and that's, answered your question with NVIDIA, Microsoft. I mean, probably Amazon. Probably Apple, probably Tesla. I mean, there's just definitely my two favorite are Microsoft and NVIDIA. And NVIDIA is powering everything AI. AI is going to be the next boom whenever it takes off, and it's not taken off yet. We're scratching not even the surface.
How'd I get muffins to fall in love with me?
Talking about muffins from Stocky Stream. Anyway, Microsoft, which has a stake in OpenAI and is already selling products with AI features. So with AI, it's very much a zero-sum game, I feel like. Once you're ahead, I don't know how you don't get ahead and stay there. Muffins is engaged? Dang. She has, but not to you. Got a thing for old muffins, huh? SGNX, trying again here. 5-minute cock. There's your 42 break. Retest of 50. Failed. Oh, there it goes. SGNX trying again. Lap hand. First time chatter. Let's go, bud. Jeez, dude. Oof. Oh my gosh. And the reverse drop. Freaking $2 like that. Elon Musk. Well, that's a dick of me. I thought he said that he was doing it. Suck a dick. That's not the way I read that. That was a positive. Yeah, and I'm red on it. Damn, that feels horrible. All right, I'm going to take the gift of getting out up here. Probably small loss rather than a much bigger one I've had. Freaking A, man. Going to start selling cover calls. Gonna go now? Holy SNGX. $11. Is that halting down? $141.23. 141.35. I bet on the Wings to do what? Make the playoffs? I think they got that. I think they got it in them. You gonna go here, bud? They ain't winning the cup, if that's what you're trying to get at. I can promise you that. And failed 1 minute cock. Right there. That right there is why I had such a shitty 2023. Oh, yeah. Inside candle. Cock fail. No. And we're back to red. I mean, it's just... Oh, and then it comes right back up, huh? This is horse shit. Look at this horse shit. Look at this horse shit. What is this range? I managed a top ticket. How is that possible? How is that so possible? Every time I enter in, top ticket. You know the odds of that to top ticket at the very moment? You know how freaking impossible that is to do it as consistently as I do? It's horseshit. Another cock. Failed cock. Give us the cock and break VWAP. Do it! $6.45. Should have gone. I want to add here. I would if my cost basis wasn't so dicked. Suck a dick. Suck my dick. Suck your dick. Suck his dick. Happy Hanukkah. Whatever. Back to green. Holy jeez, this freaking day. Scrambling, you're supposed to let me know. Supposed to let me know. Jeez, dude. They hit the sell button on this thing, didn't they? Well, it's 1:30. Haven't done shit. Up $60. That's what I'm gonna call it. Not the greatest day. I finished yesterday 400. Wasn't feeling good. Went and took a nap after that. Today, $60. Thank you, Cater. Send feet pics. Love you too. Thank you, Guac. Send feet pics. Wilda, Wex, feet pics. Remember when I used to make 25K? Yeah. World was also on fire then. I don't think I want to live through that ever again. So, in the mail, thank you, Cater. 12 meals and Mickey D's. Do they have the $5 meal in my area? I have no idea. Okay, Scranton. All right, we'll be back out tomorrow. Probably up early again because we got hot movers. Whichever one of these ends, maybe moves after hours is kind of the sign. But we'll be back at tomorrow. We'll be raiding Nikki Taylor here. She's fine. Peace out, everybody.